Okay.
Hello, welcome back. Cash Flow Tactics. We got our buddy Ryan Lee joining us here today. We got a really interesting topic today. One that I think about this kind of on a regular basis. And Ryan, I don't know if you can zoom in for us and explode this as we get into it here.
Yeah.
But we're going to be talking about the concept of net worth. Jimmy, I know you got a few thoughts on this. Why don't you share it with folks?
Bullshit.
Completely bullshit. I agree. So why is net worth bullshit? Well, we right now in our portfolio have 120 properties, and if you look on paper, net worth, it might look pretty good, but I almost never take into account net worth when I'm making a business decision. When we're running our real estate. Our real estate business, like it just doesn't ever factor in. The only thing that matters and the only thing that impacts our business on a day-to-day basis is cash flow. And so that's what we're going to really get into here. And what is this little chart you have pulled up, Ryan? Why don't you explain this for folks?
All right. So, and you're exactly right, Bob. I mean, the whole concept of net worth is such a flawed concept because, think about how the typical American manages and plans for retirement. It's all about accumulating this big sum of assets in who knows where they put it. But let's say you're 65 and you have $1 million in some type of an investment account. What does that even mean? And net worth is meaningless until we can convert it back into cash flow. How much income will that $1 million generate and how long will it last? And so right here is just a quick analogy to show you that I've got three different investors on here. I've got a doctor here who has $450,000 of assets, but $0 of cash flow. She makes $250,000 of income, so how financially free is she? Well, she's financially free enough to make her assets last for about a year and a half. So just based on what her savings are, she doesn't have any cash flow. We've got another guy here who's got $1 million and an $86,000 a year income. So he's about 10 years wealthy, right? He can make his assets last for about 10 years. On the third example here, we've got a woman who makes $40,000 a year, has 10 rental properties, and those 10 rental properties produce $3,800 per month of cash flow, meaning that she is 100% financially independent, right? That $3,800 times 12, she has enough cash flow to cover her expenses 100%. And it's really easy to see when you evaluate finance that way that net worth really means nothing compared to what we're really looking for. So in traditional finance, we measure net worth, right? And net worth is all it is. It's showing you what the difference between your assets and liabilities are. And Bob, you mentioned in business, does that matter at all for you in business?
It really has no effect on us.
It matters to the bankers. That's it.
Yeah, it matters to our bankers, exactly. But you can look good on paper as far as net worth, and have your bank account be overdrawn. Like from a business perspective, it's, in my opinion, pretty much meaningless.
You got it. So what's the difference then? Tell us a little bit about cash flow and how you really evaluate and analyze your investments. And what is it that you're really looking for?
Yeah, so if you look at from a net worth perspective, let's just take a typical house. Let's say you have a house that's worth $100,000 today's market value, and let's say you owe $70,000 to the bank. So from a net worth perspective, you would have $30,000 in equity and a net worth of $30,000 overall. If this was just your only piece of property, your only asset. But from a cash flow perspective, we look at what is our income on a monthly basis, and we figure that out by saying what does the property produce in monthly rents, and we subtract out all our expenses. So, for example, that woman that had the $3,800 cash flow, she's getting $380 per property. So let's say she's bringing in $1,000 per month in rents on that same property, and her expenses are you said it was 380, so $620 a month, right, between her principal and interest and her taxes and insurance. So after all said and done, if she pays her mortgage, she pays the real estate tax, the insurance company, maybe some miscellaneous repairs on the property every now and again, she's left with that. And it's a very simple calculation to come up with. But that's actual money that she can use to live off, right? So the $30,000 that she has on paper she can't tap into unless she refinances the property or she sells it. But that monthly cash flow kicks off each and every month, and she can live off of it. And the other thing is that if there is a downturn in the economy, that $30,000 on paper can evaporate like that. And if you want to find plenty of case studies that are out there, a lot of real estate investors in the real estate boom in the mid 2000s were counting on net worth. They were focused on that figure, and they didn't think about cash flow at all. And overnight, they went bankrupt.
Yeah.
So if you really start with cash flow as the number one priority, it's very hard to go wrong in investing, in my opinion.
And then net worth, to me, it's completely arbitrary because it's what some appraiser says it is, whatever your top line is. Like, we were talking to our accountant today, like, how do we want to evaluate our properties? We want to evaluate the purchase price we bought at some appraiser's evaluation, or at our lease option prices. There's no real standard, but cash flow every month is something you can touch and feel every 4 weeks.
Yeah.
And just like Bob said, that evaluation can't change by 50% overnight in a crash.
You got it. And that's the crazy part is, if you can just realign that one focus rather than investing for that big balance, that big net worth, invest for cash flow. And that's quantifiable, that's measurable. You know exactly if your expenses are $10,000 a month, you need to have assets that produce $10,000 a month in cash flow. Simple. Game over. It's so easy. It changes the whole nature of financial planning. So here we talked a little bit about Rich Dad Poor Dad in the last one. So we're going to look at the cash flow indicator of real wealth. We're going to look at how the middle class, the wealthy, handle their cash flow. So I'm going to bring up two little graphics here. Again, buy the book, Rich Dad Poor Dad, if you haven't done this. And what he's showing us here is for the middle class, the way they handle their savings. You can see they have a job, right? So they're earning money. They bring that salary in here. We've got an income statement and a balance sheet. And for most people, their income comes in, and you can see it goes right down here to the bottom into liabilities, right? They buy mortgages, they buy cars, they have credit card debt, student loans, the cost of living, whatever it is. But their income comes in, and it goes out the door for liabilities. And so for the most of the middle class, they never get ahead. And then what they do with their savings is they take their savings and they put it in an asset that doesn't cash flow, like a 401k. And so they're stuck, right? Robert Kiyosaki calls it the rat race. Every single day, they have to wake up over and over and over and over again and go back to work because their income goes to their liabilities. The cash flow patterns of the wealthy work the exact opposite. So here we've got a wealthy person, and you can see income statement, balance sheet. What a wealthy person does is they have income that comes in, and then they buy assets. Jimmy and Bob specialize in real estate, cash flowing assets, and that cash flow can then flow up out of their balance sheet and pay for their expenses. So we've got a lot more detail here in this that will kind of walk you through this. But the question you need to ask yourself is, how wealthy are you? And from a cash flow perspective, how long can you survive on your assets? If you converted your assets to cash today, number one, what amount of cash could you generate? And number two, how long would it last? And when you start setting up your financial plan that way, it becomes so much easier to determine what you need to do to exit the rat race. Guys, you have anything you want to add to that?
Yeah, I mean, we talked a little bit about our example of, hey, you can look really good on paper net worth wise, but have zero cash flow. The inverse is also true in that you can have zero or even negative net worth, but still be cash flowing. So in that previous example where you said the $100,000 house, you owe $70,000 and you're cash flowing $380 a month on it. Let's say the market takes a drastic downturn and real estate prices drop in half, right? So that house you thought was worth $100,000 is now only worth $50,000. You're underwater on it. You owe $70,000. But guess what? In most real estate downturns, rents actually stay even, or a lot of times even climb. So you still got that monthly income, and you still have the same fixed expenses. Your taxes might actually go down a little bit, so your monthly cost actually goes down. So your cash flow might even increase in a downturn. So you could have zero net worth, negative net worth, but still be cash flow positive. And guess what? You're still getting your monthly expenses paid for. If you've got enough properties, you can still be living a very lavish lifestyle. Let's say you have 10, 15, 20, 50 properties. You can be doing very well for yourself, but have zero or even negative net worth. And that's why I think it's almost meaningless. I mean, unless you just, like calculating a number and playing with your Excel spreadsheet, I don't really see a whole lot of point in it.
And a lot of people do like to do that. So
Yeah. I occasionally like to do it too.
Yeah. But to me, it's just such a banker, like, your nose is up in the air, like, I'm sophisticated term.
Yeah. Yeah. And I mean, it does matter when it's actual liquid assets. If it's cash, gold, or silver, maybe a money market, or our favorite, we all know it's cash value whole life insurance policy. That's actual money you can eat, and that does add up to real net worth. But as far as real estate or even businesses owned, until you realize that payday, it's money that can just evaporate overnight.
We'll end this video saying just can't eat equity.
Can't eat equity. So guys, download your own copy of this mind map. Text cash flow to 797979. So cash flow to 797979. And that is something you can put your hands on as opposed to equity that you can't eat. So guys, catch us in the next one.